Hello everyone, today we'll talk about the basics of investing in real estate. I'll give you some key formulas which are applied when starting your portfolio or whether you are a seasoned investor who already has a portfolio. Most of the realtors in the market, they get confused in the rental yield and the ROI. So I'll also give you the difference and I'll give you something which no other realtor would have told you. So stay with me and let's get started. Let's start with return on equity, which is a very basic formula. So return on equity is your profit divided by your equity into 100. So for example, you made a profit of 400,000 and your equity was 600,000 and you multiply it by 100. Which gives you 66.6%. This is your return on equity. Secondly, let's calculate rental yield. So rental yield. So for rental yield, first we need to calculate the net profit. For net profit, what we'll do, we'll subtract total revenue and total cost. Let's say our total revenue is 20 and our total cost is 10. So our net profit is 10. Now, in order to calculate the rental yield, we will do net profit divided by total cost of investment. Cost of investment into 100. So let's say, for example, 10 is our net profit and our cost of investment is 30. So our total rental yield will be 33.3%. Let's calculate return on investment or ROI. So for your ROI, we first need to calculate the annualized returns. For annualized returns, we first have to see what is the final value. Final value means today's value. Then what is the initial value? And your holding period. So let's take an example. Let's say our final value is 50 and initial value is 30 and our holding period is 5 years. So the formula which we'll apply is final value minus initial value divided by initial value multiplied by 100 multiplied by 1 divided by 5. So it gives you 13.3%. So this is your annualized returns. Now in order to calculate the ROI, simply what we need to do, your annualized returns, which in this case is 3.3%, into how many years you are holding it, which in this case is 5 years. So your return on investment is 66.6%. So now we know the basic difference between a ROE, return on equity, rental yields, and return on investment. But this is just not the end of it. First, we need to understand there is one more calculation which goes in, which is real return on investment or real return on your equity, which is inflation adjusted returns. So how do we calculate that? let's start. Let's start our calculation on real return on investment. So our previous ROE calculation was 66.6%. Our rental yield was 33.3%. And our ROI was again 66.6%. So when we talk about the real rate of return, it is 1 plus your, let's talk about ROE first, your nominal rate of return, which is 0.66 in this case, divided by 1 plus. So let's take an inflation number at 3%. So 1 plus 0.03 minus 1. So in this case, on return on equity, our real rate of return is 61%. So let's calculate now real rate of return on the rental yield, which is R equals to 1 plus your rental yield, which is 0.33, divided by 1 plus your inflation number, which is 0.03, minus 1, which comes to 29%. So it is 29%. Now again, let's calculate real rate of return on investment. R equals to 1 plus ROI, which is 0.66, divided with same 1 plus your inflation number, which is 0.03, minus 1, which gives you a number of 61%. So your rate of return is 61%. I hope it's clear now how to calculate your basic numbers, which is return on investment, return on equity, and your rental yield. These are something basics, when you speak to someone regarding investing in real estate. These are the key formulas which every broker in the market should know, but unfortunately most of the brokers don't know even the difference between a rental yield and the return on investment. Well, if this video was useful for you, please like and subscribe so that in future I can make more informative videos for you, and so that you can benefit from it. Thank you so much for your today. Have a good day. Bye-bye.